Hello, welcome to another live broadcast from Master Investors Company. Today's topic is going to be called, what are the three types of investors? And I want you to understand at the end of this video how you can tap into the investor type A, which is the highest level, because we have control over our cash flow, we have control over our investments, we know how to build an asset from scratch, we know how to read financial statements. In this valuable video, I want you to take massive action and start building your asset column, because at the end, our mission here at Master Investors Financial Department is to elevate the financial well-being of all partners. So with that being said, let's dive into the blog. Make sure you hit the subscribe button and also turn on the bell notification so that you get notified every time we go live on a valuable video like today. Okay, so if you have any questions, leave it on the comment section below. Also, I left some links in the description that will take you to our website, and you can also join our email and list where we will be delivering great content to you on a daily basis to elevate the financial well-being of yourself. And hopefully you can also share this information with your associates so that they can also help themselves. Remember that investing is a team sport, and we have to choose that team wisely because we have 24 hours a day and every day counts. We want to make sure that we are getting rich quick with the investments move that we are making and the cash flow that we are building from our cash flowing assets on our asset column. We're going to be learning about business language, because the broader our vocabulary is when it comes to business, the richer we will get. Most definitely. Words are the most powerful tools humans ever created. They open doors, they close doors, and they allow us to tap into unlimited wealth that is available to all of us. So if we can just better ourselves every single day through high quality financial education, like we do here inside of Master Investors community, then we are going to be wealthy, and we are going to be able to keep that wealth going generation after generation. And that's why today's blog, you can find it on our main website, as you can see right here. Let me see if I can open this up all the way. Okay. And you can go to the blog tab and then find the blog that we released yesterday. What are the three types of investors? We're also going to leave the link below. You can go to our main website at www.masterinvestor.education. Okay. So it is very easy to call ourselves an investor. We have met people across the world that have claimed that they invest and are investors, but that doesn't tell us much. Usually we have to ask a few questions to find out what kind of investors they are. What are the three types of investors that exist? We broke it down in three categories because it's very simple. And remember, our mission here is to provide high-quality financial education made simple to elevate the financial well-being of all partners. So here, this is because there are investors and there are people who dabble and invest in, meaning that they don't know what they're doing. They're giving their money away. They have no control over their asset column, the things that they invest in, and I should say they trade in, such as a stock that they maybe purchase at a certain price because the salesman behind the broker company told them, hey, this is a great asset, which is a fake asset, because an asset puts money into our pocket whenever we're not working, and it should start putting money in our pocket the second we start acquiring that asset. So it might take a day or it might take a month before we see that first passive income check that comes in whenever we're not working. Remember, here at Master Investor, we have rule number one, which is we build and acquire cash flowing assets. We work to build passive income. We do not work for money, okay? Very a huge know to make, because many people in the world, all they know how to do is to work hard for money. And here at Master Investor, we take a step farther and we say we gotta work less and make more. And how do we achieve that? It's very simple. We have to have an asset or assets that produce cash flow without us being in there. And how do we take ourselves out of the picture? Well, the first step is to understand systems. Okay, so a true business is a system of systems that do the selling and selling for us, and they're working hard for us. So when we begin to learn how to build a successful business with the BNI triangle that we're going to demonstrate to you, and we talk about in all of our podcasts and blogs and our webinars, that there are 8 elements to the business and investor triangle, and that will help us understand whether we are building a successful business or whether we are investing and acquiring in a successful business for that matter. So there are 8 elements. What are they? The first element is mission. The second one is leadership. The third one is team. Then it goes product, legal, communications, systems, and cash flow. And I'm going to show you in a minute how does that look on a graph, okay? So that you can take a screenshot. You can also save this video on your playlist and then come back to it, write some notes, and take massive action. At the end of this video, I would like you to take massive action. Either join our paid members only digital courses, get one of our ebooks, book a live consultation with one of our coaches, and start building the asset column. Start putting yourself into the mindset of building wealth through cash flow and assets, and not giving the money away, but rather building your own asset or acquire your own asset with a credit card, with the loan, raising capital. I want you to understand that in order to become wealthy, the right way and the smartest way is to use debt, because debt is tax-free. So as long as we invest in a credit card into an asset that is producing and is going to pay that debt back, that credit card off on its own, and is putting extra passive income at the end of the month after everything is already paid, the interest of that credit card is paid, the expenses of the business are paid, and it's leaving us cash flow into our pocket. And that's what we call good debt, okay? So there are 2 types of debt, bad debt and good debt. And it goes hand to hand with an asset liability. Good debt goes hand with an asset. And bad debt goes hand to hand with the liability. So we have to understand that in order to make money work hard for us, we need to understand how to use debt so that we can get leverage into our cash flow, right? And so we want to tap into the speed, and we need speed in order to become wealthy fast. We need to tap into the velocity of money. We talk about the formula and how to acquire an asset that pays back the initial investment, whether that was done through a credit card or a loan or whatever way you invested into that asset to acquire it. That asset will cash flow back and will pay that debt as soon as possible, and we will still keep control over the asset regardless if we have zero money invested into that asset, meaning it's all about control. It's all about keeping control for the long term, and it's still being able to receive that residual income, aka passive income, aka cash flow. Cash flow are the most important words in the business language. So let's dive into the 3 types of investors, right? Type C investor, we talked about in the blog, are financially uneducated and look for people to tell them what to invest in. Those are the type C investors. They are seeking salespeople because they have no business or financial education in them, so they are afraid to do their own investing and building their own asset column. So they think that if somebody tells them, hey, buy this asset, which is a fake asset because it's not putting money into their pocket unless they sell it at a higher price, and that type of income is called capital gain. It's portfolio income. So we're talking about building passive income here. That's why type C investors, we encourage you to not be a type C investor. Get educated financially like you're doing through this video, okay? So they have little interest in investing in their financial education so they can become better investors. They know little to nothing when it comes to finances, which means they have to rely on the advice of other so-called experts. And these experts are nothing but salespeople earning a commission for the type C investors' money that they are getting to buy a stock or whatever for a certain company, okay? So we don't want to be advised by these people because they're not making money the way we would like to make money. If you like to become an inside investor, someone that earns residual income, aka passive income, you have to understand how to build a business, how to read financial statements. And that's what I mentioned at the beginning of this video, is that at the end, I want you to take the fact that in order to become an inside investor, someone that is receiving cash flow from an asset, it takes knowing how to build a successful business, whether you're doing it from home, using the internet, whether you're using real estate as a vehicle to get to financial freedom and building true wealth. And true wealth is not measured in dollars, it's measured in time. How much time do I have to live the way I like to live without lowering my means, living the standard of living that I got going on right now? How much time do I have without doing anything? If I stop doing everything that I'm doing and just oversee my operation and my assets, can those assets continue to print money throughout the entire year? Can they continue after that first year? Can they be pumping money into my bank account even 10 years after I stop doing anything, right? And so that is how true wealth is measured. And what we want to do here at Master Investors is to help you understand that in order to achieve that level of wealth and in building true wealth is by acquiring cash flow and assets that do well in any type of economy. So we don't want you to predict the market in the market recessions, because we understand as an inside investor that the market goes up and down. That is part of economy. So we just have to be prepared for any type of economy by being a type A investors, by understanding that we can actually make money and cash flow, right, from any type of market. Whether the market's crashing, we can actually even cash flow more because we are acquiring cheaper assets that will do well in any economy. Business will always continue and money will always continue to evolve and so forth. So we just have to have financial education to be able to have assets that will do well and make us richer even when the economy is crashing. So the next type of investor is type B investor. And I want you to write down on the comment section which of investor you are today and what would you do right now to change your life to become a type A investor, to get into an inner circle that will help you get there. And we want to invite you to our inner circle here at Master Investor by joining us, by getting our digital product that we released last month. Is called How to Build Cash Flow with the Internet, subtitled Turn Passive Income On, over 500 pages right to you, delivered in any device. You can download it. You have access with a back office that we have for you on members in a members pay section only and on our website. And you will have the step-by-step guide in how to build your first asset from scratch, how to turn your passions into a cash flowing business, how to acquire assets, what is good debt, what is bad debt, and everything is detailed in there. We have devoted a lot of time into building this digital course so that you can actually get wealthy from it by taking massive action, by following it step by step, and it's done in a very simple manner so that you can understand what steps to take right away. It does not take a lot of time to start making cash flow if you follow our 3 simple step system that we have put together inside of that digital course. And you can find that in our courses here. If you go here to all our courses and join us here, you have you can download it to any device, you can share it, and also you can have access for life by just coming into your members area and having access through here, through our own website, okay? Become a paid member of Master Investor. We value your business. We thank you for watching this video, right? And subscribe. If you have any questions, make sure you hit the subscribe button and leave a comment below, okay? So let's continue to the Type B investors. Type B investors seek answers. They often ask questions like, what do you recommend I invest in? Do you think I should buy real estate? What stocks are good for me? I talked to my broker and he recommended I diversify. What do you think? My parents gave me a few shares of stock. Should I sell them? Type B investors should interview several tax advisors, attorneys, stockbrokers, and real estate agents. They should find advisors who practice what they preach and run fast from anyone who is selling investment advice and getting rich on commission and fees alone. Type B investors should look for investment advisors who make money investing in the same investments they are selling. We often find that many high-income employees and self-employed folks fall into the Type B investor category because they are busy and have little time to look for investment opportunities. Type A investors is the type of investors here at Master Investor we recommend you to become, because we are devoted to learning every day more about financial education, and the more knowledge we have, the more wealth we can build successfully for free without no money, because knowledge is money, and we understand that money is created with debt, and that's why debt is tax-free. So if we can invest debt to create passive income, we are already tax-free entities, and we can minimize the number one highest expense that we all have, which are taxes, okay? So Type A investors look for problems, and that's why I always say here at Master Investor is that when we're building a business, we are solving a problem. It's built to solve a problem in the marketplace. And so what are your passions? And find out who you are internally so that you can start attacking the problems in the marketplace that best interest you and find a solution and fill that need, because there's always a demand for a solution of a problem. And so we need to have a solution that addresses that problem. And if we can have a system that does that for us, and we know how to build a system that does it on an autopilot basis, then we can actually depart from that system and make sure that that system grows successfully and is selling and is delivering the product successfully. And if you have no products, or you don't want to make any products, or you have no time to make products, the good news is that there are thousands, and I should say hundreds of thousands of digital products and physical products out there that you can build a system around by sending traffic to a unique link that the company will give you for bringing clients to that product. And every time somebody subscribes or becomes a member or buys a product from that company, they will send you a high ticket commission in the form of residual income, because if it's a product that requires a subscription for the entire year or years to come, then you will have a percentage of that, and oftentimes it's above 75% commission. So it's about working less and making more, remember, right? And so the more education we have financially, the more we're going to make money work hard for us, the more money will chase us, and we're going to be doing less chasing the money, and actually we're going to be able to get rich for free and create money from thin air. How would you like to sell worldwide? Even when you're sleeping, you're receiving commission after commission through cash flow, because you have a digital product out there, you have a physical product being sold on autopilot with systems that are doing the telling and selling for you. Imagine that for a second. Have you went to sleep and made money? And if the answer is not, then we want to welcome you to our community, because we're going to show you step by step how to successfully build an email list of paying customers, people that are waiting for you to give them products so that they can go and purchase. Remember, there's already a group of people wanting the solution that we are offering. They already made a decision to buy. They're looking for it, and we just have to put that in front of them, and that is called targeted marketing. And we're going to show you how to do marketing and how to make sales on autopilot without you having to be there, using our systems that we have in our inner circle, so that you can start becoming financially free and start building your asset column with cash flowing assets. So a type A investor is always seeking to solve problems. We welcome problems. In particular, we look for problems caused by those who get into financial trouble. Investors who are good at solving problems expect to make 25% to infinite return on our money, meaning that if we invest $1,000 with a credit card to build a one-page website that is selling this product, that is, we don't even need to physically touch the product. It's a digital course or whatever it may be. And we're saying high traffic, targeted traffic of people that wanting this product that we are selling. And we successfully do it month after month. And now we recoup the entire $1,000 that we invested with the credit card in less than a month, because the first 10 clients who purchased the product were created enough passive income to pay back the credit card. We pay back the credit card. We have no money invested in the system. It still runs. And we still bring in the same clients and more every single month as paying customers. They're buying the product. And so now we have control over that asset, that one website that is selling that product. We have control over. We have no money invested. We have received all our money back that we invested, which is the credit card that we use. And now we are printing money legally for free. Think about that now. We are printing money legally for free. So now let me ask you a question. If the government of the United States is printing money legally today after 1971, because gold got separated from the dollar, and that's when dollar became debt, became monopoly money, became fiat. The government was allowed to start printing money to move the economy forward. That's why inflation really doesn't matter for the type A investors. We actually welcome hyperinflation. We want inflation to continue rise to the sky, because we can actually get richer for free and with debt, tax-free money. And so if the government is printing money, then why are so many people saving money? That makes no sense. You're actually saving paper, trash, something that is losing its value every day. In order for money, the dollar, to maintain its value, we have to move it from asset to asset. So we have to keep it moving. We can't stick it under our mattress. It's not 1970 today where it was backed up by gold. You know, and the reason why that happened in 1971, when President Nixon separated the gold from the dollar, was because we were importing more than exporting. And so if the dollar is attached to gold and we are buying things from other nations, then we're giving our gold away. And so we had to do something different in order for that to stop happening, because then we lose our precious metal, which is a great commodity, gold, right? And so we want to keep control over that commodity. We don't want to give it away because we simply buying and importing a lot of things. The United States has always consumed other people's products. You know, that's why today a lot of things are built in China, and we're buying from China every single day. So, and there's nothing wrong that people here in America start building factories and start making products in America, because we have all the resources here anyway. But because labor over there is a lot cheaper, then, you know, a lot of companies decide to take the factories of China so that they can build their products. So anyway, the most important thing is that we take advantage of inflation because we are financially educated, okay? So type A investors have financial education. We invest on our financial education on a daily basis because we understand that it is what is going to take us to the wealth that we desire. And so we want to start building our asset column with financial education. We have a strong financial foundation and process the skills necessary to succeed as business owners and investors. We use those skills to solve problems caused by people who lack such skills. Okay? The average investor talks about, I bought my house for $500,000 and today it's worth $750,000. My house is my biggest investment. And it's not, because if it's not making you money, then it's not an investment. It's a liability. Okay? It's taking money out of your pocket, because if that person that's living in that house has to leave their home every morning to make the payment for the mortgage, right, and exchange their time to make money to pay the mortgage, then it's not an asset, it's a liability. It's taking money out of their pocket, and regardless whether their house is value more money today because of inflation, that means nothing really, because it's not putting money in their pocket. And another thing that they say, the average investors, my retirement account is worth $1 million today. It will be worth $3 million when I retire. The stock market on average has been going up 8% every year since 1974, and real estate over time has averaged over 4% per year for the last 20 years. Those things are illusions, and whether they're facts or not, they're not talking about cash flow and assets, right? This is the average investor. This is another thing that they say. Have you heard of people say things like this before? Like their house is the biggest asset that they have. It's not, because again, if it's not making money into their pocket, it's not an asset, it's a liability. These statements are evidence of investors who count their chickens before they are hatched. Each statement above relies on the word of others in the future unfolding as we hope it will be, rather than on facts. And that is why we say the average investor does not make much money in the market. The average investor has a count your chickens before they hatch a mentality. They buy items that cost them money each month, liabilities. Yeah, call them assets based upon opinions. They count on their house in a stock portfolio going up in value in the future. Because of this, they lose control over the personal finance. To us, that is very risky. To the type A investors, super risky. Work less and make more. Then there are others who work to make their money. We want to share an insight, the paradox of hard work. Some believe in hard work as a means of making money. Once we master the art of building the business in an I triangle, right, we will find that the less we work, the more money we will make, and the more valuable what we are building becomes. And this is the business and investor triangle, like I told you at the beginning of this video, that there are 8 elements. So when we're building a business, we want to make sure that it has a mission, it has a team, it has leadership, it has a product, it has their legalities in order, right? Legal, systems, communications, and cash flow, okay? Because a business, that's why the number one ability of an entrepreneur is learn how to sell without selling, using systems, right? Because that's where the cash flow is going to come in from the front end. The clients are buying the products. And we also got to learn how to raise capital from the back end, which are the bank institutions, you're right, using credit, using loans, and also private or angel investors who have a lot of money and they're looking for opportunities to make their money work hard. And so they look at our business or our business plan, and they decide to put their money to work in our operation. In order for us to become rich, we need to learn to build and put together systems that could work without us. After we built our first business in an investor triangle, right, using this method right here that I show you with this triangle, using that as a guidance to build a successful business, and then we sold it, we realized what we mean by the less we work, the more money we will make. We call that thinking solving the BNI triangle riddle. Then I began referring cash flow quadrant, how the wealthy and master investor invest. As you can see, the cash flow quadrant is composed of 4 quadrants on the left side, and this is also a circle right? The cash flow circle right here, because at the end, we're all involved in some way or another. And so we need to decide which side of the circle, which side of the quadrant we are going to be devoting ourselves for the rest of our life. If you're unemployed, you have a job, you're on the left side of the quadrant. If you're self-employed, you own a job, you're on the left side of the quadrant. You're working for money. If you don't show up, you don't make money. On the right side, we have the business owner, own systems that work for us even when we do not. And the inside investor, money work for us. And so once we start building our business on the right side of the quadrant with systems, then the cash flow that we're getting from that, we got to move it into another asset. And so that's when we become successfully making money work hard for us, right? Because we have now the excess of cash flow. We now need to put that to work, okay? And if we don't have it, then we need to put another angel investor's money to work or the bank's money to work. That's why the number one job of an entrepreneur is to raise capital. And the number one skill is to learn how to sell without selling through systems. We have found out the difference between those in the E's and S quadrants and those in the B and I quadrants is that the E and S people are often too hands-on and fall into the classic error that is more important to work in your business than on your business. The key to success is laziness. The more hands-on we are, the less money we can make. Rather than being hands-on and working hard, successful people find innovative ways to do more with less, and that is called leverage. You know, that's what is important, to delegate and to use debt. And they empower their teams to be successful for them, right? So don't be average investor. That's our recommendation from this video. In order to be successful, it is important to understand how we make money and whether or not it is actually making us rich. With financial education, you'll be able to tell if something is an asset or liability, and therefore you'll make a better decision when investing money into anything. For example, when it comes to mutual funds, a type C investor, right? He's a type C investor because he has no control over that asset. They're giving the money away. As a type B investor, they seek professional answers to financial problems, right? But they still don't invest any financial education for them to become better investors. So they lack financial education and they can't make decisions on their own. Right? As a type A investor, we find and solve problems that others cannot or do not want to solve. And we make a lot of money in return. We also may give our money to other type A investors in areas where we are not an expert, but whom we trust. So investing is a team sport, and we got to surround ourselves with smarter people than we are in the things that we want to become successful, so that we can actually grow and have a secure road ahead of financial success, right? And so averages are for the average. This is why we need not to be average. We have met many investors who are new to the world of investor. They have been investing for less than 20 years. Most have never been through any market crashes or on any real estate worth much less than they paid for it. These new investors come up to us and spat out of industry averages. Averages are for average investors. A professional investor wants control, and we want that control begins with ourselves, our financial education, our sources of information, and our own cash flow. That's why it's important to look at your financial statement and begin building the answer column inside that financial statement. When we build a successful business, then that business will buy more assets, okay? So take control. If we want to be rich, we must take control over our financial education as well as our personal cash flow. There's nothing wrong with hoping the price of something goes up in the future, as long as we don't lose control of our finances today. The sophisticated investor knows that being financially educated gives us more control today, and if we keep studying, we will have greater financial control tomorrow. Don't be average investor any longer. Join our inner circle here at Master Investor and start building a better tomorrow where we have control over our investments and our cash flow. Make sure you leave a comment below on this video blog and Make sure that you give us a like if you find this content valuable. I'll see you on the next video. Make sure that you come to our website and find yourself the digital course and join right here. You can actually find it on our main website. Just scroll all the way down and join our group, our community. We value your business, and we hope to see you on the inside of our inner circle, bringing you the good and bad news of money, the business principles that work in all economies. And I'll see you tomorrow on our next live broadcast with tremendous value that can enhance your life to the next level. Our mission here at Master Investor is to elevate the financial well-being of all partners. Thank you for watching, and I'll see you tomorrow. Bye for now.